All right, let's welcome in Kevin Green, senior markets correspondent, to help set up some of the other action we're across today. Let's start out with a look at Broadcom. Shares rallying right now in the pre-market off the back of its latest quarterly results. Why don't you take us through some of your takeaways, KG?
Yeah, well, he obviously reported a really decent quarter here after having a fairly low bar, and we saw that with the price action kind of moving to the downside and hitting that 200-day moving average. But they were able to exceed the street's expectations when it came to the adjusted earnings per share, which came in at $1.60. Street was looking for $1.49, and revenue did top earnings expectations as well at $14.92 billion versus the estimate of $14.61 billion. But it's also the outlook moving forward. The fact that they are continuing to ramp up the AI revenue just in general has been a tailwind for this company. And they did set a very high bar in that last earnings announcement. And some traders and investors were kind of criticizing them because they were trying to guide out till 2027, which is really, really hard to do. But they were able to kind of back this up, at least for this earnings announcement. You did see a nice little pop. Now, they did continue to stress the AI semiconductor growth within their business, but they might be seeing some weakness in other pockets. But the AI growth is really kind of the shining bright spot for them. And it seems like they're doing a phenomenal job here. Counter trend what we saw from AVGO, which a lot of traders kind of compare the two, but they obviously operate in two different segments in two different markets.
KG, okay, obviously you can't discount the AI space and the growth story that Broadcom is having, better than expected. But you mentioned pockets of weakness. Where were those pockets of weakness, and how much should investors pay attention to that?
Well, the pocket of weakness is really just focusing on the hyperscalers themselves. And the CEO actually did highlight that they're just really focusing on the major players, not up-and-coming startups, not small businesses or mid-sized businesses. So they're really kind of putting all of their chips into these very large companies like a Google in order for them to continue to churn out revenue. And that's where you're going to see some of the implied risk in the future, the next year or 2 years. If you do not see that CapEx spending from a lot of these major players continuing to ramp up or at least keep at these levels, once again, that could have an impact when it comes to their revenue just in general. So that's kind of where you're looking at, is there strength there? Yes, but are you concentrated? That's kind of the weak part. But at the end of the day, once again, we're seeing the shares up higher today. Let's see if it's going to be able to hold throughout the session, which obviously we've seen a lot of volatility in the broader equity market just in general.
Yeah, Broadcom up 10% in the pre-market. Good move, solid move there. Not enough to recover all the ground it lost so far this year, especially off the back of that DeepSeek news. But let's take a look at HPE. That is under some serious pressure in the pre-market. Take me through some of your takeaways from its latest quarterly numbers, KG.
Yeah, not too good when you're looking at it. Shares are down about 17% in pre-market trading here. Now, they did announce that they are going to be laying off around 2,500 employees to save around $350 million by 2027 here. But the adjusted earnings per share for the quarter actually did meet the street's expectations, coming in at 49 cents. Revenue slightly above the street's expectations, coming in at $7.85 billion. And you're seeing revenue growth of around 16% on a year-over-year basis. But the problem that we saw was the guidance for Q2, as well as the full year guidance. They're looking at Q2 revenue coming in between $7.2 billion and $7.6 billion. Street was looking for $7.9 billion. And the adjusted earnings per share estimate for Q2, big miss here. They're guiding between 28 cents and 34 cents. Street was looking for 50 cents. So unfortunately, what they are actually seeing is a buildup of inventory when it comes to some of the AI server products. And they actually blame that because of the transition to Blackwell from NVIDIA. And so they actually will have to discount prices, which is obviously going to lower margins and have an impact when it comes to profitability. So not only are they not seeing the top line growth, they already have a buildup and maybe overproduced in one segment and not able to kind of keep up with this refresh cycle that's a little bit unusual for NVIDIA. NVIDIA usually has a refresh cycle of about 2 years when it comes to the GPU space. You're seeing new announcements about every 9 months right now. That's very hard to keep up with.
Yeah, and it's interesting, going back to HPE, additionally mentioning the job cuts, planning to slash 2,500 jobs, but that's also not moving the needle in terms of investor reaction. Any final thoughts on HPE, KG?
No, once again, this is a stock that has been very volatile over the last year. Technically, if you kind of look at where the price is at right now, we have seen some buyers really kind of step in here if you're looking at a 3-year weekly chart. So let's see. Obviously, we have some selling happening in the pre-market session, but this could be one of those stocks that catches a little bit of a bid. If we have good news, a little bit of a bid in the equity trading session just because of the technicals itself.
Okay. All right. Let's go. Why now? Go big picture. Yesterday on the S&P 500, we finished at 5738. What are you paying attention to for levels today? And really, is the catalyst all about the jobs report?
It's definitely going to be about the jobs report. Obviously, the news coming out of the White House here. I mean, we're continuing to see a very aggressive selling pressure. Any of the pop that we've seen on an intraday basis have been sold into. And once again, the jobs report could be that lever either to the upside or downside here. What I'm looking at as far as levels to the upside, looking at around 58.40, and then to the downside, unfortunately, kind of looking to the downside here, looking at about 56.50. And then if we break that, Diane, you can look at 55.75. It sounds like a very wide range on both the upside and downside, but that is just the environment that we're in with the higher implied volatility, with the VIX kind of hitting around 25 for now here. So unfortunately, it's been negative. And then also we have to hold that 200-day moving average. This is kind of the line in the sand. We break these levels here to the downside, Diane. You're talking about a pretty major break from the September highs that flip to us from a resistance zone to a support zone. We break that. That's where we kind of get a bigger flush here. So hopefully we got some buyers to step in today.
Okay, we shall certainly see 58.40 is your level to watch for the upside. Downside, 56.50 as KG mentioned. But if we break that, 55.75. Kevin Green, thanks, Tom, for the setup for today.